Hello everyone, the Chart Guys have been working on an introductory technical analysis course for quite some time now, and after surveying hundreds of traders with what would be the most sought after information regarding technical analysis, we came up with this course, When to Enter and Exit. It covers over 5 hours of the basics on when to enter and exit, and we feel after watching this course it will help build a foundation of technical analysis knowledge which will eliminate a lot of the uncertainty in the world of trading stocks. So the course outline, we go over the psychology of trading, establishing a game plan, the different indicators we use to signal a bullish and bearish entry, how to recognize support and resistance levels, poor entries, where traders make mistakes, exit targets, how do you know where to sell your trade, where to place stop losses, that's very important, minimizing losses is what keeps you in the game long term, my personal preparations, how I go about getting ready for each trading day, and then piecing it all together, utilizing all the information we just learned and how to apply that in the real world for making successful, profitable trades. As a bonus, we also include a lot of information on finding entries and exits utilizing patterns, and you can find these patterns on every time frame on pretty much any stock and commodity trading, and certainly being able to recognize those patterns can give you an edge as well. So we hope you will check this out. Again, it's an introductory level course. So if you are new to technical analysis and trying to get a firm grasp on things and feeling a little bit overwhelmed, then this course is for you. I hope you check it out. Appreciate you watching. Hey everyone, checking in on the biotech sector, XBI IBB, LABD, CLVS VRX, and SRPT. So starting with XBI, we can see the range is getting pretty tight on the daily. The bears have the edge because we closed near the low of the day on Friday, and it was on increased bear volume. So what we had was the breakout from the downtrend. Then we formed a low, a base of support on the Trump dump, where we backtested and held the 100-day moving average as support, as it had been resistance, rejecting the price multiple times. We bounced and formed a lower high, and now we're still in that range, forming a higher low. So the range that I'm watching is 62.51 support and 65.79 resistance. And here we come to test the 100-day moving average again. We've got the middle Bollinger Band right there as well. If we close below the 100-day moving average and break 62.51 support, we are looking back down at the 200-day moving average down at 59.77. So that would be a clear bearish signal, losing the 100-day moving average. You can see the weekly chart. We have clear lower highs and also now higher lows. So it's getting tighter and tighter. After rejecting from the 100-week moving average, we're back testing, trying to hold the middle Bollinger Band support, 62.59. So you can see with those lower highs and those higher lows, there's not much more room in between those levels, so we would likely see a clear break within the next month or so. Checking IBB, it's already made a bearish break, so need to be cautious with XBI. This might be a little bit of a heads up, as we had the same back test on the Trump dump and the hold of the 200-day moving average as support. That was previous resistance. We saw the bounce and a lower high and then a lower low right away. So that was a clear bear signal. Now we've lost all moving average support, and we're looking down at the next base of support at 263.92. That's a long way to the downside, and there's not much else to be looking at for support. Increase in bear volume, bearish MACD cross, weekly time frame does have some key support levels. The 200-week moving average of 272.24 is an important level for the bulls to hold. You can see the same thing with the lower highs and the higher lows, tightening range. And the bulls need to show up and defend these weekly supports because we're close to a longer-term bear break on IBB. So this might be a little bit of a heads up that XBI bears are about to take over and lose that support. Because of this fact, the fact that IBB has already broken support, I would certainly be looking bearish rather than bullish. LABD, I'm not going to look at LABU because the chart's pretty much the exact same as XBI, but LABD is inverse, and we're seeing a bullish close here on increasing bull volume at the end of last week. We're on the verge of a bull MACD cross. First time we've closed over these exponential moving averages on the daily since this pullback started in LABD, so short-term upside looks pretty good. Resistance is 15.11 and 15.58, and the bulls are trying to turn things around after a little double bottom. We drop down here to 13.35. And then we drop down to 13.40. So bulls maintaining that support, trying to change the trend. They have a ton of work to do, but starting to see the first signs. Need to break this lower high pattern on the weekly. So the overall longer term goal would be to get above 19.45 and break this middle Bollinger Band, turning that level into support. That's going to be closer to $18 starting this next week. So again, tons of work for these bulls to turn around the trend. We're just seeing some short-term upside, and whenever I see a longer-term downtrend like this, very clear downtrend, I'll lock in my profits sooner if I am playing the daily chart bullish, because I know the prevailing trend is bearish. Individual name here, let's look at CLVS, and these bulls are incredibly strong. This is by far the strongest biotech that I'm watching, and we had a bearish reversal inverted hammer, a little bit of pullback. The bulls bought that next day and closed up near the high. Bearish reversal inverted hammer, long upper wick of profit taking, little pullback. Bulls bought that dip and closed at the high of the day. We have not seen a red day in the past 7, and we are not confirming any bearish reversal candlesticks. So resistance is 59.74, and why the bulls are buying all the dips and loving this chart is the lack of resistance. We're in breakout mode on the weekly, and we have a gap to fill up until 96.27. Tons of space to the upside, and we have no previous price resistance in this range to be watching here. And we're looking at psychological levels. $60 will be next resistance. Weekly middle Bollinger Band will be support. But full-on breakout mode and tons of strength here on CLVS. VRX is the opposite. It's extremely weak, and looks like on this bounce attempt, everybody buying the bounce exited on the gap up for selling, and it's been nothing but downside since then. So once we lost this middle Bollinger Band support, that had me giving up a lot of interest in VRX bullish, because that was the key resistance that we got over that had us looking for that bullish move. But now we've lost that level, and it's back to resistance. A must hold for the VRX bulls, $13.81. And then down at the low, $13. If we can hold $13.81, we do still maintain a little bit of a longer-term higher low pattern. So that's a must-hold level. And we look at the weekly time frame, and this weekly candlestick was another reason I lost a lot of interest in the bulls. Huge upper wick of profit taking, a little gravestone doji still rejecting from the exponential resistance. So now the bulls need to form that higher low and then get over those exponential resistances. So if the bulls can prove themselves to me on the weekly time frame, then I'll be interested again, because we are still oversold with the RSI under 30. So need a new higher low, and then the 8-period exponential moving average resistance to become support. It's going to be down around 1550 starting next week. Last, we've got SRPT, and it had a nice bullish breakout, consolidated, and this is where we reach that equilibrium with higher lows and lower highs. So here's our breakout. Our low of consolidation was 35 even. Our lower high was set at $38.55. And then as soon as we broke $35, that's game over for the bullish short term. That means back off. And if you were in a bullish position, I would have had my stop loss just below that support. So they had increasing bearish volume 2 days in a row on that bear break and follow through to the downside. So now we're looking at the middle Bollinger Band, 31.75, or the 200-day moving average at $30. And this sets us up on the weekly time frame after that rejection from the middle Bollinger Band to head back down potentially to these moving averages down in the $27 range. I would be surprised if the bears took it that low. Look at the bull volume compared to the bear volume on those weeks. So I would be scouting for a bullish entry off some of these daily moving average supports, but I need to see a bullish reversal candlestick to be confident in doing so. So being very patient, looking for the bulls buying the dip either off the middle Bollinger Band on Monday, or if that level cannot hold, the 200-day moving average would be a nice target as well. So that's what we've got here on the biotech sector, and the S&P 500 is trading straight across, lots of back and forth, red to green, no conviction in either direction. New all-time high on the S&P 500 is only going to help the biotech bulls, and if we see a clear bear break and a loss of the middle Bollinger Band support, then we know the bears are likely to take over XBI as they already have on IBB. So if you've not been watching my SPY videos, I suggest doing so, just because having a gauge on what the overall market is doing can certainly give us some insight into individual names and individual sectors. So I appreciate you watching. Hope you have a great weekend, and we will see you soon.